Okay, for today's lesson, we will be teaching you to prepare financial statement with adjustment, but we are doing it for company today. So at the end of lessons, you all must be able to prepare the financial statement by going through all the adjustments. So financial statement comprises of two statements. One is what we call the statement of financial performance. So in the performance, of course, we will have to calculate and then see whether our business make a profit or loss for the year. Okay. Then in the next statement itself, you will need to prepare a statement of financial position. So today we are focusing on company. That's why the shareholder equity circled in red here show that we are going to present our share capital and retained earnings. The rest of the other section are similar to what you have learned in sole proprietor. Okay, this will be the question that we will be doing for today's lesson, some limited. And then we are going to look through all the additional information over here. So before you even start on the additional information, we always want to work in a very efficient manner. Hence, we will classify the elements accordingly into the following here. So T will be stand for trading, E for expense, and the rest accordingly. So if you have share capital, what I need you to do is you put it as an EQ. So EQ will simply means your equity itself. Then retained earning is also part of your equity. Okay. Motor vehicle, fixture, everything are all our assets, but I want you to be very specific. These are our non-current assets. It's for use in the business for long term. It cannot be easily converted to cash. So these are features of non-current assets. And then we have accumulated depreciation. If you notice, I put it as a negative NCA because this is what we call a contra asset. Accumulated depreciation will be deducted from our non-current assets later on when we are doing our statement of financial position, because we want to reflect the net book value of our non-current assets. So you continue, you have your trade receivable, your inventory, all these are your current asset, cash at bank, current assets. Trade payables are our suppliers. We owe them money because we buy goods from them on credit, and these are our current liability. Okay. For bank loan, if you notice, they talk about repayable on 31st December 2025. Right now, we are preparing the statement on 30th of April 2020. So the date simply tells you that they are going to pay off the loan by 2025. So whether the date is mentioned or not, it doesn't matter because bank loan are all non-current liability. You will take more than a year to pay back. A year later. So classify it as a non-current liability. You have learned only one non-current liability, which is bank loan, or sometimes they call it mortgage loan. Okay, the rest are all current liability. And I will need you to reclassify or rename the bank loan because we have terms that we use in preparing our financial position. So I need you to rename it and call it long-term borrowings. So whenever you see a bank loan in a questions where they need you to prepare a financial statement, you need to change the name to long-term borrowings. Okay. As for the rest, sales revenue, cost of sales, these are part of your trading of goods, buying and selling of goods. So we put it under T. And then commission income will be I, and the rest will be all your expense. Okay, salary expense, rent expense, interest expense. So I hope you have gotten at least 80% of it right. Okay, moving forward, you have to try other question and practice this again. So let's take a look at the first additional information. So on the last day of the accounting period, 30th April 2020, the question mentioned that we have a commission income that the company had received in advance. So what must we do when we see this piece of information? Whenever you see commission income, you see all the expense appearing in your question, these are all income that we have received for the entire accounting year. So if I receive $5,200 for the entire year, on the last day they inform me I have received in advance, I received too much. So how much income is really earned at the end of the accounting year as at 30th of April 2020? The amount should be lower because we received in total 5,200. 600 has not been earned yet. So what you need to do is you go to your commission income, you deduct 600. So in other words, the commission income that we earn will not be that much. It will not be 5,002. It should be lower. Hence, you minus the $600 away. And then we have a name for this income that we receive in advance. I will need you to create a new item. So you find a space at the bottom of the page, at the side of the page, find somewhere on your question paper, write down this new item, and at the same time do classify them as well. Income that we receive in advance are what we call our current liability. Next time don't write here because later on will have working over here, right here, right below. Understand? If not, later you have no space. Okay. So whenever you approach the additional information, please ensure that you perform a double entry. In the sense, I minus 600 commission income, first entry. Second, I create a new item called commission income received in advance. And now you are going to do the same for your rent. Okay, the rent have been prepaid. Prepaid means we had paid in advance. We paid too much. So the rent expense 44,000 that we have over here is what we paid for the entire accounting year. In total, we paid 44,000. On the last day, they tell me we had paid too much. We haven't used up the full 44,000. The 3,007 that we have paid is prepaid. It's meant for the next accounting period. So what must you do? You again need to minus and then create a new item called a prepaid rent expense. Prepaid expense are not our expense. It will only become our expense when we use it in the following accounting period. So for the meantime, it is our current assets. So when you do many of these questions on financial statement, you realize that they like to test you income received in advance or income receivable. If it's income receivable, current asset, then you add. If it expense, you pay too much, you minus. If you pay too little, payable. Then you add current liability. So there are two types of adjustment that you need to manage. Okay, next one. For your trade receivable, additional information said that the company review is debtors. Debtors means trade receivable, our credit customer. And they decided that the 5% of the year-end trade receivable may not be collectible. So take note, the keywords here is may not be. It is not a confirmed case of a bankrupt. So read the question carefully. So how do we estimate the 5% of our trade receivable? We will need to create this item called allowance for impairment of trade receivable, and we do that by taking 5% times 41,600. Okay, so your ending allowance will be 2080. Okay, if you don't know what is AFIOTR, it simply means allowance for impairment of trade receivable. So you need to create this new term. And then what else do we need to do? Okay, allowance are contra asset. Later on you have to show it as a deduction from your trade receivable. At the same time, you need to create this new item called impairment loss on trade receivable. Okay, so two new items to create. So for this particular question itself, there are no allowance given to us at the beginning of the year. That's why your ending allowance and impairment loss will be the exact same amount. Other question you may have to compare and then you adjust accordingly. For this question, you have to create two item. One is called impairment loss. The other one is called allowance. Okay, next we move on to depreciation. You have learned two methods of calculating depreciation. First part of the questions, they ask you to use reducing balance, okay, to calculate depreciation for your motor vehicle. So recall the formula for reducing balance. You will have to take the percentage times the net book value. How do we even arrive at the net book value? You will have to focus on the cost. Where is your cost of your motor vehicle? It is given as 160,000. This is the cost price. This is the amount that we pay for our motor vehicle. And you have to deduct your accumulated depreciation for your motor vehicle, which is the 8,000 over here. Okay, so net book value can be taken by cost of your motor vehicle less accumulated depreciation. Then you multiply by 10%, you will arrive at $15,200. So this is the cost of using your motor vehicle for your accounting period. So you will need to create this new item called depreciation of motor vehicle, and this is our expense. Yes. Okay. So do not confuse yourself with depreciation and accumulated depreciation. They are not the same. Depreciation are only the expense for the current year. Accumulated, as the word suggests, accumulated include past year depreciation. So once you have created the new item, please remember to add in to your accumulated depreciation. So now your accumulated depreciation will include current year. So after you have done that for motor vehicle, you are going to repeat the same process for your fixture and fitting as well. Okay, so now let's take a look at how we're going to calculate depreciation for fixture and fitting. For fixture and fitting, the question tells us to use a straight line method. So again, let's recall the formula for straight line method. For straight line method itself, there are two formula that we can tap on. One use the percentage, the other one use the useful life. So it depends on what kind of information is provided. If they give you a percentage, then of course you must look at the one that is percentage. Sometimes they give you useful life, then you use it accordingly. But a lot of times students will get a little bit confused and then they start taking cost of fixture and fitting and start minusing accumulated depreciation. We don't do that. Take a look at the formula closely. You are supposed to take cost minus scrap value. Is the scrap value for fixture and fitting provided in the questions? You can't find it, am I right? The reason why you can't find it is because the scrap value is 0. Whenever it's not given, it means there is no scrap value. So how do you calculate your depreciation of fixture and fitting? You will simply just take the cost, which is 48,000 there, and you multiply by the percentage accordingly. Finish. No need to minus any value because there is no scrap value for your fixture and fitting. And again, depreciation is our expense. And lastly, please remember to add in to your accumulated depreciation. If not, later on when you prepare your financial position, you'll be using the old value, the outdated one. So every time create depreciation, add into accumulated. Any question with regard to depreciation? Okay, this is a confirmed adjustment that you will see for every question that you'll be doing for financial statement. So please make sure you are good in it. Okay, next is more of correction of error. You have a 900 for insurance expense, but they put it into your interest expense. So how do you do your correction for this particular error? Of course, you will have to deduct from your interest expense. Okay. Then if you scan through the question, you are supposed to put them as insurance expense. What happens if you can't find the insurance expense in the question? If you really cannot find, then you have to create a new one. If you can find, you add it in. Cannot find, you create a new one again. And then this will become your another expense. Any question with regard to additional information number 4? Okay. Okay, next one, we are going to look at our bank loan, or what we call a long-term borrowing. Okay, right now when we prepare the financial statement, we are at 30th April. You must bear in mind we are right now at 30th April 2020. The information given to us is 10,000 of the loan. So 10,000 is part of the 60,000. 10,000 of the loan we are going to pay back on 31st December 2020. But we are not here yet. Not here. We are now here. So what does it mean when they tell us that they are going to pay some of the loan? Yeah. So you go and work your way. You take a look. We are here. Going to pay off here. This is about 8 months. Okay. In other words, we are going to remove this 10,000 from our long-term borrowing because they are not considered long-term anymore. So what's the time frame for non-current liability? You only pay them a year later. So you are going to pay off 1 month, 2 months, 5 months, 10 months, maximum up to 12 months. It shouldn't remain here. It should be removed, and then we need to create a new term. They look almost similar, but we add in the word current portion of long-term borrowing. As the word suggests, current portion, this is our current liability. So we still haven't paid off the 10,000 yet, but we will need to remove it from your long-term borrowing and create a separate entry for it. Any questions on how to do the current portion? Okay. Okay, lastly, you have this additional information where they talk about declaring dividends for your company. So they are going to declare a dividend of 10 cents per share. So you need to know how many shares do the company actually issue as of now. is 50,000 shares. So how do we calculate our dividends? Of course, you will just take 10 cents multiplied by the number of shares. So that means we are going to reward this group of shareholder, the 50,000 of them. The total amount will be $5,000. Okay. So dividends is just a temporary entry. Dividends are going to be closed out at the end of the year. Do you still remember how do we close off our dividends? Where do we transfer our dividends to? Do I put them into share capital or retained earning? Must be one of them because it will be transferred to your equity. Okay, if I learn in company, we will not adjust share capital. Share capital is only for shares. Okay, so in other words, dividends declared needs to be closed off to retain earning. So what happens when you close it off? It will reduce your earning, because the moment you declare, you are taking part of the earning out as a distribution to your shareholder. So if you can look at the definition of dividends, it's about distribution of profit. So the act of distribution, that's why it's a minus 5,000 there. That's why you distribute to the shareholder. So that's your first entry. What's the second entry here? The moment we declare, you need to ask yourself when the payment will be made. The payment will be made on 31st May 2020. But right now, which date are we at? We are still here. All the time we are at 30th April 2020. So have we paid out the dividends out from my cash at bank account? Not yet. So we are owing our shareholder dividends. Hence, we need to create this new item called dividends payable. And it will be recorded as part of my current liability. Any question to clarify on this? If not, the rest of the time is you will spend doing your financial statement. So continue to try the questions, then after that we will look through the answer, then you can check accordingly. So you'll try first.